Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of January 22nd. Each week I go through the same process, just looking at overall health of the market, health indicators, recent watch list and trade performance, sector performance. This just helps me assess how aggressive I want to be and where I want to be deploying capital. So heading into the week of January 22nd, market conditions are good. I am deploying capital on long trades. Here's some lists you can check out for potential trade setups to watch for. The best swing trading stocks watch list has been predominantly where the action has been over the last few weeks. The current stock watch list, which looks for more consolidation type patterns, we just haven't had too much of a slowdown in the market. We got a little bit in a couple of the indexes, but the really strong stocks have basically just been pulling back a bit and then running, pulling back a little bit and then running. So they haven't really been setting up these consolidation or like triangle type patterns. So this current stocks watch list is more those types of patterns, whereas the best swing trading stocks list is just really high momentum stuff. And it gives some ideas on strategies you can use in that article for capitalizing when the price is just running and not really forming the patterns that we look for in this watch list, which is more rounded bottoms, triangles, or contraction patterns, those sorts of things. Best ETFs and best performing ETFs and best performing stocks, always, they're on the move as well, so you can check out those. And these are a little bit longer term type trades to check out, so a little bit different than swing trading. So let's look at how the market indexes are doing. I look at several different ones. In the upper left corner here is the NASDAQ, the S&P 500, the NYSE Composite, Russell 2000. We can zoom in here. You won't be able to see this in the upper left corner because my face is covering it, but that upper left corner one is the NASDAQ. Below it, NYSE Composite down here, Russell 2000, S&P 500. So these each look at a little bit different segment of the market. You have the really large cap stocks, largest in the US, small cap stocks, a broad array of company sizes and industries in the NYSE Composite, and then you have the NASDAQ, which is a little bit more tech heavy. Canada market, lots of gold and oil energy type stocks. Then we have Bitcoin here, silver and gold. We'll get to those. First, let's check out the NASDAQ and the S&P 500, both surging to new highs on Friday. Really strong price action. And you can see we did get a little bit of choppiness over the last few weeks here. So that could have possibly set up some of those contraction type patterns. But if you notice in the NASDAQ, a little bit sharper decline and then snaps higher. So this has kind of been the process we've been going through during this rally. Very brief pullbacks, strong surges, brief pause, strong surge. So just looking at that, we won't have, we did actually have quite a few contraction patterns during this rally in the past. I didn't see too many on this recent consolidation, but like I said, the best swing trading stock list, just looking at the high momentum ones, it's been able to capitalize and would be, some trades would be well underway based on that method. Russell 2000 here, obviously much weaker in a pullback, and the NYSE Composite hanging out near the highs, but hasn't quite had the strong move that the bigger companies did, but still holding up quite well. Everything I would say is in an overall uptrend, but the Russell 2000 definitely a pullback. So a little bit of divergence. We can see some of the small cap names are not as participating as much in this rally, but since we're always looking at this, at least I'm looking at the strongest stocks to trade, lots of stocks are still very strong at the moment. Same with the Canada index, kind of hanging out similar to the NYSE Composite, still in an overall uptrend, but just kind of chopping sideways at the moment, but still definitely trades could be considered on the long side there. Let's talk about Bitcoin briefly. I've changed this. This is a weekly chart, And just to show the overall uptrend through 2023 into 2024, as you can see, we've had multiple 20% plus pullbacks during this rally. We are having one right now. I recently just wrote an article. You can access it here. By the way, if you don't know where this article is, it's always under stocks. And if you go to stock market analysis and trades, it'll be up there because it gets updated each week. But I broke down basically every bull market in Bitcoin, looking at the big cycles, and then also every single rally. So the 2013 Bitcoin rally, what were the average pullbacks? How far did the price run? The 2014 Bitcoin, this one was a bit of a false start. It didn't get going much. We look at why that might have happened and some things to look for. 2015, 2017, break down every wave and pullback, just to give us a sense of what happens during a big bull market. We are in a bull market right now in Bitcoin, so what kind of pullback can we expect once those pullbacks occur? What kind of moves higher can we expect from that before the next pullback? Those types of things. So we are in a common type pullback here. It's, I think, about 17% last time I checked. So still well within what's very typical for a Bitcoin rally. Average was about 27% pullbacks are the average during a Bitcoin rally. And as we saw, we had a few of them already here. Silver, not too interesting to me. Gold, a little more interesting. You can see we're still just hanging out near those multi-year highs. We've been chopping around here since 2020, so there's no urgency to get into this. If it breaks out, we could be in for a multi-year run, multi-year trend to the upside, but no reason to, I'm not getting in yet because this could chop sideways for another year or drop. We just don't know. But once we start seeing a lot of the gold names and stuff come up on our lists, then we'll know that, hey, potentially gold's running. But until that happens, just something of interest in the background. Let's look at the market health indicators. This is the S&P 500 chart. Again, my face is covering that upper left corner, but this is the S&P 500 index chart, showing a little bit of 2022 when we were declining over here, 2023 uptrend. And so this top indicator is how many stocks are trading above their 50-day moving average. So the red line is S&P 500 stocks above their 50-day moving average. The turquoise is all U.S. stocks above their 50-day moving average. So we have 74% of S&P 500 stocks above their 50-day and 62% of all U.S. stocks above their 50-day. Notice a little bit of a divergence. This actually dropped off quite a bit from last week when the S&P 500 was actually lower. It was chopping around here. We had really high levels. And now we're moving to new highs, and it's dropping a little bit. So a little bit less participation than there was, but still, these are overall good numbers. If we're above 50, I'm usually buying. Volume, not really important to me at the moment. This is daily average, or just daily movement, daily percentage movement of the S&P 500. You can see there has been a change. Bull markets are characterized by lower volatility, especially to the downside. You can see I've left 2022 over here. That was an overall downtrend. You have really big daily moves that are greater than 2% drops, and you just have lots of them. And that's what characterizes a bear market, is typically very high volatility. And then you can see the change here. It just starts to get smaller. We still have a couple bigger drops, but none of them exceed 2%, and you get back to smaller volatility very quick. So we're still kind of in this range I've drawn most often. The top one doesn't matter as much as the bottom one. We just don't like seeing those 2% drops in a day. That shows really strong selling pressure, and that's usually a warning sign to stay away for a bit, but we haven't had any of those in a very long time, so we're still smiley faced there. This is the NYSE Advanced Decline line. It measures advancing stocks minus declining stocks as a cumulative number. And you can't see the other part because I've just zoomed in a bit to the more recent price action. And you can see we had a peak here, and we're trading just below those peaks, whereas the S&P is at a new high. So this is a very slight bearish divergence. It says, a lot of stocks aren't participating as much, and we actually saw that with the indices, right? Because the small caps, the Russell 2000, is in a deeper pullback and still pulling back. The NYSE composite is just kind of chopping sideways. Only the NASDAQ and the S&P have shot higher. So not all stocks have participated in this recent surge. So this makes sense. So it's minor at the moment. All the indices are still in uptrends, but if this were to continue lower while the S&P continues higher, that would be a warning sign that fewer and fewer stocks are participating in the rally. So I would call this neutral at the moment. It's not really hurting, it's not really helping, but it is a bit of something to keep an eye on. I wouldn't even call it a red flag or a yellow flag yet, but just something to be aware of. This is up volume divided by total volume. We only look for extreme levels up at these lines here, so 90% upside volume or only 10% upside volume or 20%. Recently we had two 80% downside days. That means all the volume that occurred that day, 80% of it occurred in stocks that moved to the downside or finished lower on the day. So that does show some selling pressure, but you can see very little damage done in terms of actual drop percentage. So I would say a very minor signal, and then we shot right back up. So we went to new highs. I would say that's invalidated because it didn't result in any sort of continuation of a downtrend. And two 80% downside days to the downside isn't as important as if you had 90% downside volume. That shows much more selling enthusiasm. Anyway, but again, not ideal, but not really hurting us at the moment. So overall, these conditions still quite good. Nothing giving us a bearish signal yet. The ultimate indicator, how many quality setups there are and how trades are working, stocks are running. I just haven't seen a lot of setups. We already talked about that in terms of the contraction patterns. If you're watching those, it kept you out of the chop basically because we were chopping around for a little bit here and we had the deeper pullbacks. So trading contractions, something like that, basically kept us out of those choppy periods because there just weren't many setups when the price is running real quick. And if you looked at the best swing trading stocks watch list, those get you out as the price starts dropping, and then as the price starts moving back up, you can get back in based on the high momentum swing trading strategy discussed in that article. Let's look at sectors on the move. Huge week, obviously, for technology, as we saw on the charts here. NASDAQ just firing higher, and lots of technology stocks in there, as well as the S&P 500. So 1 week performance, technology and communication services, huge week. Bolsters them up there on the 1 month performance and also puts them up there on the 3 month performance. Communication services a little bit lower, but still overall really good performance, right? And we also like healthcare and financial hanging out near the tops on pretty much all of these. Healthcare a little bit lower here, but still near the top of the list. Healthcare toward the middle. Financials also not bad. Financials one of the tops over the last 3 months. Real estate one of the tops over the last 3 months. And yeah, so those are some areas that you could potentially watch for. Technology again, just really strong at the moment. So kind of looking at, these ones that are top performers over the last week, the last month, and hanging out near the tops on basically all three of these time frames. Just if you want somewhere to focus in a little bit. So what I'm doing right now, conditions are good. I'm deploying capital on long swing trades, and you can also, there's also options if you're not finding enough out there in the swing trading coincidentally, Forex swing trading course now available, on sale till, well, it'll be on sale for a long time, but sale priced until February 5th. And you can also day trade the Euro USD. You can day trade stocks. So if you're not finding as much as you would like with a particular style, there is always the option to add in other trading styles, including investing, passive investing, or active investing. So that is your weekly outlook for the week of January 22nd. Have a good week out there.